Morning Trade Live. Time to go inside out on the media and the streaming space, looking at Comcast, which reported its earnings this morning. Right now, we're seeing the stock up about 2.5%. And joining me here to my right, Naveen Sarma is with us, Media Entertainment Managing Director, S&P Global Ratings. Thank you for being with us. So we're seeing this name, revenue growth, theme park, Xfinity mobile gains. There were some real bright spots within this. Your thoughts?
Yeah, exactly. I think expectations are relatively low for Comcast, especially given how Charter reported last week. And so the fact that they reported numbers that were either in line, a little bit better, and talked about some things on the call that showed some stabilization in the business, I think we view positively.
Are we worried about them losing some of the Xfinity subscribers?
Sure. I mean, that's going to continue, and the number that they reported was one of the higher numbers that they've ever reported. But given what expectations were, at least on the street, the numbers were better. We're expecting overall for the full year for them to lose about 750,000 subscribers. And if you look at the pace that they did for the first half of the year, it's a little ahead of that. But we expect it to kind of come in line over the second half of the year.
So the streaming, they said they had more streaming subscribers. What are those streaming subscribers really looking for? Why are they looking to Comcast?
Well, so they were actually flat quarter over quarter from the first quarter to the second quarter at 41 million subscribers. But what consumers are looking for there is new content. They've got an exciting slate of content coming on over the next year or so, including the NBA, which starts in October. They've got the Olympics, so they've got a lot of sports. Plus, they've got their, the movies that they're making that will hit over the next couple of quarters. And so, they've got a good slate to attract additional customers.
They talk about the business connectivity customer relationships, 2.71 million. These customer relationships must be huge.
They are
hugely important, I mean.
They are, and that's really where the growth is coming from. It's one of the pillars that they talk about constantly, that they're growing business services. Look, they're expanding into a segment like enterprise, which they, years ago they hadn't done, and so they've added scale. They've added, they bought businesses that help them to do that. They just signed an agreement with T-Mobile to offer wireless service as well to those business customers. So they're making inroads in a segment that they hadn't previously been that strong in, at least if you go back 5 years ago.
So I'm looking here, Peacock, NBC Universal streaming service, that reported $1.2 billion in revenue. That was up $1 billion in the prior year. The losses continue to narrow. That's good news there. Disney agreed in the second quarter to pay NBC Universal almost $500 million. We have the buyout happening too with Hulu. What's going on with Comcast overall, with spin-offs and what they're foreseeing in their path?
Right. So I think it's still a work in progress, especially on the cable side. They talked about a number of things that they started to do at the end of the second quarter: the price locks, the repackaging and repricing. It's early stages, and we'll see how that develops over the rest of the year. The media side, they've got the spin-off of the linear TV business, which will happen they haven't announced it, but we kind of expect it sometime by the end of the year is when that'll happen. And they just opened up a new theme park. So, there's a number of things that are positive and a number of things that we'll have to wait and see how they develop over the rest of the year.
Also here, they talk about the tax benefits, some of the infrastructure investments that they're making. The final thoughts there, because at the same time, that's for Comcast. I didn't want to confuse Disney there. But they are still making infrastructure investments, and that will probably help them in the tax benefit department.
Correct, and I think they said on the call that they expected about $1 billion a year in annual tax savings from this, from this bill. How that money gets applied back into the business, or does it lead to additional share repurchases? They didn't talk about, but that's one of the things that we'll pay attention to is what do they do with all the excess capital that they now have?
Which names do you think are the real winners when it comes to these streamers? I mean, do you think about Comcast as a leader, and what are the other names? I mean, obviously Netflix has been the behemoth.
Right, Netflix, clearly Amazon. I think Disney is a winner given its size and scale and its brands. I think the jury is still out on everybody else. They don't necessarily have a lot of scale. Peacock, for example, is domestically focused primarily, and it's very much a scale game, and so the fact that they're just domestic hurts them. So we expect to see, you've got the Paramount Global transaction closing in the next week or so, and so we expect to see them announce some things. I think you could see some joint ventures, you could see some bundling arrangements. It's still a very fluid situation, but clearly, when you look at Disney or you look at Netflix or you look at Amazon, they clearly have the scale to survive in this ecosystem.
Understood. Okay. It's great to see you. Thank you so much for being here. Big day to be on for Comcast, and record days across the board. Comcast is up nearly 3% today, and we see Charter, for example, up 0.5%. Naveen Sarma, Media Entertainment Managing Director, S&P Global Ratings. Thank you for being here. Now, Tom White is here, host of Fast Market, and you have some example trades, Tom. Good morning to you, looking at CMCSA.
Yeah, Comcast is having a nice day today. It's pulled back from session highs. If you look at some of the metrics behind maybe the beat, it's still down about 12% so far this year. I think one of the key things when you look at a stock like this, you can't expect like maybe outsized moves. You see the 1-year chart here. So I looked at a strategy that, hey, if you want to own the shares, I think one of the biggest benefits of owning this stock is the dividend yield. It's nearly 4% dividend yield, and I think that's why people maybe still invest in this company, because the growth rate just isn't there, right? So I looked at a cover call strategy where for every 100 shares of stock that you buy, you sell an out of the money call against it. And the idea here is to keep your stock and then continue to roll or adjust that short call, creating credits. That lowers your initial break even, it lowers your risk, it increases potential profitability while owning those shares. And it's a paid to wait type strategy, right? You're collecting yield not only on the dividend, but also from the out of the money call that you sell. So I looked at for every 100 shares of stock you buy, sell one of the August 15th monthly options that expire in 15 days, sell one of the 34 strike calls against it. You're going to pay roughly about a $32.80 debit. So you're buying the shares at a discount. You get to collect that dividend yield. And then as the trade progresses, you have the ability to roll or adjust that short call on a week-to-week or month-to-month basis. The idea here is to continue to collect credits. That increases that profitability I mentioned, and then also continues to lower that break even. But this might be the way to play it. It's just pretty conservative and a pay-to-wait strategy.
And next up we have Netflix, which is down slightly today, but still a clear behemoth. 1 year up almost 90%. Tell me how you would do an example trade on Netflix today.
Yeah, it's pretty surprising. This stock's pulled back about 12% from those all-time highs that we saw. I mean, we haven't seen that, a downturn in Netflix in a while. This has been a repeated winner over the last few years here. So maybe this gives you some opportunity here to maybe get in here. The RSI on it, the relative strength indicator, is down below the 40 level. We haven't been below that level very much, and usually it bounces after getting to those near oversold levels here. So stocks down about 12% from those all-time highs. So I looked at creating a neutral to bullish strategy where, hey, even if the stock continues to move lower, it still gives me potential profitability. Looked at selling a put vertical. Went out to the August 15th monthly options that expire in just 2 weeks. Selling the 1160 strike put, and then against it, buying the 1140 strike put. So a short $20 wide put vertical that's neutral to bullish. You're going to collect roughly, if the stock's trading right here, about $6 credit on it. That's what you can make, $600 per spread. You've got $1,400 in risk, but by collecting that $6 credit, it takes your break even all the way down to $11.54 over the next 15 days. That's over 2% below the current share price. So you're giving yourself that cushion. The probability of that short 1160 strike that you sold in this position, probability of finishing out of the money is roughly just over 60%. So the trade-offs here, where I've got $1,400 in risk to make 600, but at the same time, I profit if the stock goes higher, stays where it is, starts to consolidate, or goes lower but remains above 1154 break even to the downside.
Okay. Pretty amazing, Tom. Looking at these example trades of Netflix and also Comcast, we appreciate it every day, Tom, with some example trades for you for your portfolio. Check them out right now. Netflix is at 1,179.